Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, with the Moose, John Mousseau, CEO, Director of Fixed Income. Been a week that we were backpedaling, dancing, trying to get out of the way of jabs, right hooks. We talked about bobbing and weaving last week on the video. John, catch us up on fixed income.
Yeah, I mean, not a weird week, but a week of volatility. You know, as we close out the week, we have a 2-year Treasury at a 5. That's down about 8 basis points. We have a 10-year Treasury around a 4.85. That's down about 8 basis points. At one point, bond yields were 15 basis points higher this week. So a lot of volatility. We kind of compare and contrast to what's gone on since the beginning of the month, and when we almost hit 5% across the board. And then what happened? All the shooting started in the Mideast, all the terrible tragedy there, and we saw it jump down in the 10-year to a 4.85. Last week, we saw it go back almost back to a 5. This week, you're a little backing and filling, right? So now you're back to a 4.85 again, and it's a lot of volatility, but kind of within a structured sides. It's almost like you're in a bowling alley and it's jumping back and forth between the breakdown lanes of the bowls.
Right.
So
right.
That's what it is. And it's what it's done is it's kind of set a framework where people can trade it a little bit, but more importantly, I think they're seeing value there. And particularly, unfortunately, with a stock market that's taking it on the chin a little bit, people are looking, for example, over 5% munis now in places like New York, where you're getting 5.15, 5.20. That is a taxable equivalent yield well above 9%. People look at that and say, hey, you know what? That compares very nice with, equity returns long term. So you're starting to see interest, but, there is a lot of volatility.
Yeah. Cash flow is cash flow.
Right.
In terms of what we're looking on the equity side, still being stingy with our cash. As you mentioned, it's been an awful long time where you could get paid on your discretionary cash a 5+ number. Right?
Correct.
So in our tactical account, we're still up there in the 25% range. In our US ETF, we're in the, let's call it the 18-20% range. In our core, a little lower. International and core in that 10 to 15. What would get us more aggressive? What would make the market more attractive? Couple old trading thoughts come to mind. I would love to see, John, a weak open, even a really weak open, followed by a strong close that day. Yeah. We're getting these decent opens or flattish opens followed by weak closes. That's showing you institutions do not want to take risk there.
Right.
And until we can get large capital allocations, large capital taking risks, market's going to struggle. So that's really one idea I'm looking for. The other idea in new ideas or adding to positions will be cash flow strength. In our tactical, we talked about last week, our largest holdings, the short-term treasuries at 25%. Right behind that, in terms of number 2, down in about a 12% range, Berkshire Hathaway. By the way, below this video, there is a link to a podcast called The Art of Investing. It's hosted by 2 gentlemen who were chief investment officers or portfolio managers for Notre Dame's endowment.
Which is very large, by the way.
They now run a private fund that invests with long-term compounding in mind. The guest in the link there is Todd Combs. Todd is the CEO of Geico, obviously a large Berkshire Hathaway company. Back before Warren Buffett hired him in 2010, he had a heck of a track record at his hedge fund. Anytime we can pick up little trading wisdoms, investment wisdoms, you only have to pick up a couple a year to start to compound and leverage your thought process.
Right.
I really encourage you to listen to that podcast. Sign up for free. You can listen to it in a car. That's what I do. So we'll be looking for cash flow heavy companies. I don't want sectors that are reliant on financing into these higher rates.
Right.
So what you do know is we'll get our opportunities.
Absolutely.
We always do. We have some dry powder starting to feel, I like to use that kindling word, John. It feels like, we have some dry kindling, and if we could get a little match thrown there, we could get a little lift.
You need the spark.
We need the spark. So enjoy the weekend, get some rest. I'm sure next week we'll have plenty of surprises for us, and we'll see you next Friday.